This is Pranav Rao from Smartkarma, and I'm pleased to have with me Arun George to talk through his recent insight on an upcoming Singapore IPO. Arun, thanks for your time today on the 9th of March. Can you briefly introduce UI Boustead REIT to listeners and what its relationship to Boustead Singapore is?
Hi Pranav, thanks for having me on the Smart Call. UI Boustead REIT focuses on logistics, high specification industrial and business space assets in the APAC region. The initial portfolio comprises of 23 properties, 21 leasehold properties in Singapore and 2 freehold properties in Japan. The initial portfolio value is estimated to be around 1.9 billion Singaporean dollars. The sponsor of the REIT is UIB Holdings Limited, which is a fully vertically integrated pan-Asian logistics and industrial real estate platform. Now, in terms of your second question, in terms of what's the relationship with Boustead Singapore, that relationship is multi-pronged. Firstly, UIB Holdings Limited, which is the REIT sponsor, was formed through the acquisition of Boustead Projects fund and property management business in March of 2025. Now, as you know, Boustead Projects is a subsidiary of Boustead Singapore. Now, Boustead Singapore indirectly holds actually a 23.6% stake in the REIT sponsor. And thirdly, Boustead Singapore will reinvest over 200 million Singaporean dollars back into the REIT to take a 19% effective stake. And last but not least, Boustead Singapore, through Boustead Projects actually, has granted the REIT a right of first refusal on its pipeline of stabilized assets in the APAC region.
Got it. Thanks for that, Arun. What do you like about this IPO?
Well, I thought about that, and I think there are 4 factors that makes me think this IPO is attractive. The first is the assets are actually of quality and largely high-spec facilities with sticky tenants. 65.1% of the portfolio by gross rental income comprises assets that serve as strategic tenant infrastructure and include premium business spaces such as Razer's Southeast Asian headquarters, GSK's Asia House, and Rolls-Royce Solutions Asia. So these are infrastructure that a tenant is not going to suddenly decide to get rid of tomorrow. The second I like about the REIT is that it has a long weighted average lease expiry, a WALE of 8.4 years for its top 10 tenants. The WALE across the whole portfolio is 5.8 years, which is higher than a typical industrial REIT, which tends to be under 5 years. So this underpins the long WALE, underpins the rental stability. The third point I like about it is that REIT has near-term growth potential from positive rental revisions, asset enhancement initiatives, acquisitions, and co-development opportunities. And the fourth and last but not least point is the valuation is attractive, based on a NAV per unit of 85 cents and the IPO price of 88 cents. The REIT trades at 3% discount to the median of its peer group on a price to NAV basis. Also, the REIT's forward dividend yield of 7.4% is a 20% premium to the peer median of 6.2%.
Got it. Thanks for that. What do you think investors should be looking out for just in terms of medium or long-term risks here?
In my mind, there are 2 risks. The first one is that the portfolio's committed occupancy rate is 89.4%. While respectable, it's lower than the other industrial REITs, like, for example, AIM's APAC REIT, which maintains occupancy about 90%. The low occupancy rate is really due to the Japanese properties, which have an occupancy rate of 76.7%. However, you could argue this could prove a growth lever in the future because management forecasts the Japanese occupancy rate to increase to 99.4% due to quote-unquote healthy inbound leasing inquiries and activity. The second risk, in my view, is the NPI yield of the Japanese properties, which is around 3.5%. Is materially below that of the Singaporean properties, which range from 5.4% to 11%. However, you could argue this risk is mitigated as based on management projections. The Singaporean properties are expected to contribute more than 80% of the REIT's net property income in both 2026 and 2027.
Got it. Well, thanks for the call today, Arun, and listeners, check out our coverage of Asian IPOs on Smartkarma and tune into our next Smart Call. Thank you.
Thank you.